In this video, we're going to cover smart money techniques, or SMT. SMT usually forms between correlated assets. Correlated assets generally move in the same way and follow a similar market structure. For example, when euro is making a lower low, GBP should also be making a lower low. When euro makes a lower high, GBP should do the same, and this continues as long as the correlation remains intact. An SMT forms when this correlation breaks. Instead of both assets making a lower low, one asset makes a lower low, while the other forms a higher low. This divergence is what we call SMT. So here we have a lower low on one asset, but a higher low on the correlated asset. When we mark this out, it looks something like this. This SMT divergence is a strong indication that momentum is weakening and that a potential reversal may be forming. Here's a clear example of an SMT divergence. Notice how price takes this high in euro, breaking above the previous high, while GBP fails to do the same. This mismatch between correlated pairs is what we call an SMT divergence. Since GBP does not take the high, this SMT becomes a price signature of a potential reversal, indicating that price may be ready to move lower. Now, we wait for confirmation. Here we get a clear bearish market structure shift, along with a fair value gap perfectly overlapping it. This gives us a high probability entry. I can place my trade here, set my stop loss above the high, and target the lows. As you can see, price delivers cleanly into our target on GBP. However, notice that euro does not take those lows. This now creates a bullish SMT divergence in euro, which is a signature that price is preparing to move higher. With this confirmation, I place my buy order right at the CISD and target the highs. And once again, price delivers straight into our targets. I hope by this point in the video you've started to understand how SMT divergences work and how powerful they can be when combined with proper confirmations. Here is another clear example of an SMT divergence. You can see that price has swept the buy-side liquidity in euro, but it has not done the same in GBP. This imbalance between correlated pairs is what gives us an SMT divergence, and this acts as a price signature that a reversal may be about to happen. Now, instead of entering blindly, we wait for confirmation. What we want to look for next is a valid entry model. In this case, we can use this order block as our point of entry. I can place my trade from this level, keep my stop loss above the high, and target the sell side liquidity. This way, we are trading with confirmation and proper risk management, not just the divergence alone. And you can see how nicely price has delivered into our targets. There are a lot of other correlated pairs like gold and silver, and NQ and ES, where you can also use this concept. But I don't want you to directly apply it on your live accounts. First backtest it properly, understand how it works, and only then apply it to your live accounts. Tell me. And this is the last example of this video. You can see price has taken the low in euro, making it a sell-side liquidity sweep. But on the other side, GBP refuses to take the low, creating a divergence. Now what we need is confirmation that gives us a bullish signature. Here we place our order on this bullish fair value gap and target the buy-side liquidity above, and you can see how easily price delivers into our target. I hope by this point in the video, you've learned what an SMT is and how to use it. That's it for this video. If you found this helpful, make sure to like, share, and subscribe. If you want to join my mentorship program, the link is in the description. And for any questions or doubts, you can also join my Discord. I'll see you in the next one.